through with your Phillips 66 stock. Just type it in Google and click enter, and you'll see this information. The name is Phillips 66, and the Nasdaq symbol is BSX, and it's 95.64 US dollar per stock for one stock right now. And the market cap is in billions, which means it's a big size firm. It's paying 3.76% dividend. Any firm that is paying dividend, that means they're financially strong, because after paying their creditors, liabilities, loans, costs, they still have extra money left. That extra money they pay to shareholders as dividends. So any firm that is able to pay any amount of dividend is a strong firm financially. Now let's go to Wikipedia and see when was this founded. You can see in this box, founded in 1917. It's 102 years ago. Let's see what the employees have to say about this firm. Copy this exactly from Google. Okay, paste it here. Type in Indeed, reviews, enter, and let's have a look. So I can see we have 506 reviews and it's 3.8 star. Just read through the reviews yourself, the pros and cons, the salaries they're giving, the photos, the jobs, and everything. And let's go to now Glassdoor, and I want to see what reviews it has in Glassdoor as well. And it's 466 reviews and it's 3.6 stars. And read through the pros and cons yourself, the jobs listed, the salaries they're giving, the interview questions, the benefits they're giving, the photos, and everything. Let's have a look at Yahoo Finance, and I want to see the key executives and the salaries they're getting. So I'll just paste it exactly from Google. Please please match the symbol with the name, because that's the symbol from Nasdaq. So PSX, that's the one I'll click, and then go to profile. You can see the sector here, industry, the employees here, and the best part is that we have 5 key executives and all of their salaries have been shown. So they haven't hidden anything from us. They have shown all the salaries. So this is important, because that means that there's a lot of transparency and we can build trust with this firm, because we have all the salaries shown. Let's go to Justia Patents. I want to see if it has any patents or not. I'll just paste it in Google like that, click enter, and I just want to say that please concentrate on applicant or assignee, because these are people who have full rights of the patents. 2013 they have patent, 2008, 2007, 2011, they have a lot of patents. That's brilliant. The more patent a firm has, the more stronger it is, the more competitive edge it has, and it's harder to beat this firm, which is brilliant. Please look for recent patents as well in 2015, 16, 17, 18, because that means they're still innovating, which is very important. So just go to the list yourself. There's another page to it as well. So it has recent patents in 2017. That's brilliant. 2018. So it means it's still innovating, which is important for us as well. Now let's have a look at macro trend, and I want to see the ratios. Go to price ratio, price book ratio, and paste in the symbol PSX. That's the one I'm looking for. Yes. And if the price book ratio is less than 1, that means that the stock is cheap, undervalued, and at discount. If the price book ratio is more than 1, that means stock is expensive. The higher the number goes, the more expensive it gets. So please bear in mind that this website takes time to load, because it has a lot of data in it. So be patient with it, but once it's loaded, it will make your life easy. And so let's have a look. Okay, right now I can see that it's 1.57, which means somebody who buys right now in August 2019 will be paying 1.5 times more money. It's 1.5 times expensive. In 2018, it's 1.98, which means somebody who buys right now will be paying 1.98 times more money. Somebody who bought in 2018 September, they paid $110 to buy something that was $55 worth. So they paid 1.9 times more money. Somebody who bought in 2012 June, they got 9% discount because they paid $27 to buy something that was $30 worth. So they got 9% discount in 2012. Right now it's 1.5 times more expensive. If you go to other ratios, I want to go to current ratio. If current ratio is less than 1, that means stock is risky because liabilities are more than assets. If current ratio is 1.5 or more than that, that means stock is safe. It has good margin of safety. I'm looking for 1.5 or more than that. Let's have a look once it's loaded. Right now it's 1.28. It's less than 1.5, so the stock is risky. Let's look at the previous trend. Has it ever been 1.5 or more than that? Yes, it has. There are fluctuations, I would say, that I can see that since we have data in 2009 December, once in 2012 March, it's more than 1.5, and then I would say that in 2014 December up till 2016 March, just for few years, it has been a safe stock. It has been more than 1.5, and then since 2016 June up till now, it is a risky stock because it has been less than 1.5. So overall, I would say it's a risky stock because majority of times it has been less than 1.5. Let's go to debt equity ratio. This ratio will tell me if the company is mainly operating on debt or equity. I'm looking for zero point 0.5 or less than that for it to be brilliant. Let's have a look. It's just loading right now. I'm looking for, so right now it's less than zero point 0.5. That's brilliant. So it means it's a safe stock. It has good margin of safety. Let's look at the previous trend. Has it ever been above zero point 0.5 or zero point 0.5 or above that? No, since we have data 2009 December up till now, it has always been less than zero point 0.5. So that's brilliant because it has a good margin of safety in terms of debt. So that's brilliant. So since we have the data, it has never been above zero point 0.5. So it's a safe stock in terms of debt. Let's go to return on equity. I'm looking for 8% or more than that for it to be brilliant. Let's have a look. Okay, here I can see it's more than 8%. That's brilliant. Let's look at the previous trend. That has it ever been below 8%? Yes, it has been below in 2017 and 16 a little bit. So for maybe 1 year, I would say in total it has been below 8%. And then I would say since 2011 December up till now, it has always been above 8%, which is brilliant. But just recently, since 1 year, I would say it has been below 8%. So overall, I would say it's brilliant.